Welcome everyone to Vested Interest. This is Shane back for our weekly portfolio update. We do these every Sunday morning at 7:30 a.m. But before we get in the video, I'd like to take a moment to thank everyone who's taken the time to watch, comment, and like the videos, and a special thank you to those who subscribe to the channel. I really do appreciate it. The channel continues to grow because of people like you. For those of you who may be stopping by for the first time, on this channel, we focus on dividend growth investing, buying stocks in good companies that pay growing dividends and hold for the long term. It's not rocket science, in my opinion. The best way to do anything, keep it as simple as possible so it really boils down to consistently investing, dollar cost averaging, whether that's weekly, monthly, annually, once a year when you get your tax returns, whatever that timeline is, into dividend growth stocks and growing companies with positive cash flow that covers the dividend and has a high return on their invested capital. I cover all of my investments into the portfolio, again, on a weekly basis. That's what this video is here right this week, right here. We're going to add $1,457 in new capital, and we did reallocate $3,100 throughout the portfolio. One of the positions we had been running a wheel on, Bank of America, has really shot up. We had $3,100 set aside for that. It's up to $37 per share now. So I'm not going to use those funds to run that wheel any longer. So I took the opportunity to go ahead and reallocate that throughout the portfolio. So we'll cover that as well. It's free to see what I'm doing in the portfolio. You know, there is no paid Patreon or paid walls. I don't have another site that I send you to or anything like that. But if you would like to help the channel, if you could hit that thumbs up button if you find any value in the content, subscribe to the channel, join us on this journey to financial freedom, join the vested interest community. Hopefully you're on your own financial journey as well. And hit that notification bell so you're notified whenever we put out any new content. Doing that really does help a small channel like me grow. It helps with the YouTube algorithm. Also share with anyone you think that might find value in the content, and drop a comment down below. Let me know what you are investing in. What did you add to your portfolio this week? Did you sell anything? I know a lot of companies have really run up, so some people are starting to take profits. Are you taking profits anywhere? If so, where? Did you get any dividends this week? And do you do options? And again, really appreciate everyone who's taken the time to subscribe and drop a comment and do all those things. It really does help. So let's jump into the video here. Well, we're going to run through the first couple slides pretty quickly. We didn't have any options plays. We did put out several options this week, one on Neutron, one on Bank of America again, but again, it is going in the wrong direction. Well, the right direction if you're looking for capital gains, the wrong direction if you're looking to buy more shares or try to run the wheel like I was. Again, I had $3,100 set aside for the options on Bank of America, and it is, I think it's closed out the week at $37, almost $38 per share. So we're no longer running that one. We did try to do the Nutrien one again. We didn't get that one. We tried we didn't get no hit on that. I think a lot of people are just buying that outright right now. So no options to speak of this week anyway. Now dividends, also no dividends. So like I said, first couple of slides are going to be pretty quick. No dividends either. Hopefully they pick back up next week. I'm sure they will. And here we will talk about the first new capital invested into the portfolio. On March 19th, we added $1,401.67. With those funds, we picked up 10 shares of Vale. This one is pulled back below my cost basis. I really like this one under $13 per share, so I'm going to continue to add to it. Vale is a mining company out of the materials sector. We picked up those shares at $12.29. We've been building out our American Waterworks position, ticker AWK. This is out of the utility sector. We're going to continue to do that. This one, again, is pulled back under my cost basis, and my cost basis was only around 118, 119. But at $117.29 is where we picked up those shares. I think that's pretty close to where it closed out the week. So hopefully it stays down here low, around 117, 118 while we build out this position. Comcast, another one I'm trying to build out. Recently I added these two here. American Waterworks and Comcast are the most recent additions to the portfolio. So we added 10 more shares there, ticker CMCSA. American Waterworks was ticker AWK. Vale was ticker VALE, if I didn't mention that. But Comcast is out of the communications sector. We picked up those shares at $42.78. And we added a little bit more to our Alibaba Group holdings position, ticker BABA. This is a Chinese company, so completely understand if some people don't like this. Actually, I think this finished out the week a little lower in the $72 range. We're going to nibble on this one. We're over 100 shares. I think we're at 104 shares now. So we're just going to add maybe a couple shares a week here, so long as it stays under 70 $74-$75 per share, and maybe build this one out a little bit more. But primarily, we're going to focus on American Waterworks and Comcast going forward. Try to build these out to at least over 100 shares, and we might back off a little bit and nibble like we're doing on BABA. All total, these new positions, this $1,401.67 added $42.25. Now, we are going to get into the reallocated portion of this. The vast majority of this is all going to be that $3,100 reallocated from the Bank of America wheel we were running. So we're going to run through this pretty quick. There is a little bit of a new capital we allocated or invested that'll come up in the next slide. So it's not all reallocated dollars, but the primary funds here is from that Bank of America $3,100 we had set on the side. So all of this page and then the majority of the next page we're going to cover will be from the reallocated funds. We reallocated those funds across Enbridge, ticker ENB, out of the energy sector. 10 shares there, $35.49 per share. We picked up 4 more shares in our Cisco Systems position, ticker CSCO. This is out of the information technology sector. I think that's, and Enbridge was under my cost basis. I think Cisco was right at my cost basis, maybe slightly under. Those 4 shares we picked up at $49.91. 10 more shares of Valet, ticker VALE. Again, anything under $13 I like to add to this position. The mining company out of the material sector, really like this one. We added 10 more shares, and we picked up those shares at $12.28. 10 more shares to our Verizon communication sector, which we hadn't added to in a long time. It is slightly under my cost basis. I think my cost basis is $41 per share. So, excuse me, picked up those 10 shares of ticker VZ at $40.42. 12 more shares to our Pfizer position, ticker PFE. We picked up those 12 shares at $27.55. Another one that is under my cost basis. I may continue to nibble on here. And Pfizer is out of the healthcare sector. 10 shares of Realty Income, ticker O, the monthly paying REIT, really has stayed down under $53, and I am continuing to add to this one. So we took the opportunity to add there, and you can see a lot of these, Pfizer, Verizon Communications, Enbridge, Realty Income, are very high dividend payers right now in the 5+% dividend yield range. So that is part of the reason I was comfortable with reallocating those funds. It is really increasing my passive income by doing that. Not that Bank of America pays a low dividend. I think it's around 2.9% dividend yield right now, but it definitely is a lot lower than some of these other positions. So 10 more shares of Realty Income, ticker O, out of the real estate sector at $52.44. Now here are our weekly buys. We included these out of the reallocated funds, but we are going to pick up 1 share of the Vanguard Total Stock Market ETF, VTI, ticker VTI there, and that's what it is. It's all of the shares in the overall United States stock market. We picked up that 1 share at $258.38. And another one that we're going to be buying weekly, at least 1 share of Schwab's dividend growth ETF here, ticker SCHD at $79.58. Those we're going to buy regardless of what the market is, right? If it's 260, 265, 270, we're going to pick up 1 share every week. And if the market does happen to pull back, same thing with SCHD, and if the market does happen to pull back quite a bit, we'll just increase that to maybe 2 or 3 shares a week and build out those positions. And that'll be a weekly buy at least through this year, if not going forward into the future indefinitely, right? I did not adjust the passive income on this slide. We will do that on the next slide. Since a lot of this is reallocated funds, you're going to have pluses and minuses. We lose the funds that we gained or that we had in the portfolio from Bank of America, but we gain the funds from these positions. So it'll be a plus and minus, and we'll get to that plus and minus on the next slide. Now here I did put in $55.43 because out of the $3,100, all the positions we saw on the previous page plus these, it would have taken me an additional $55.43 to make the purchases. So this is part of the new capital for the week. So I put it here. Again, I did not put the passive income total here. You'll see it down here at the bottom. We'll cover it in a minute. Now, most of this you can call the Medical Properties Trust the new capital. 55.43 is pretty close to the 58.47. So we'll call that the new capital. But with reallocated funds, we picked up 2 more shares of Sibanye-Stillwater, another mining company out of the material sector, ticker SBSW at $4.65. Another one under my cost basis. My cost basis is around $5, so I don't mind nibbling on this one so long as it's under my cost basis there. We'll call this New Capital. We picked up 14 shares of Medical Properties Trust. Haven't added to this one in a while. This is another REIT out of the real estate sector, ticker MPW. I know a lot of people may be staying away from this one, but very high yield on this one as well. They do have some trouble with tenants right now. I believe that the worst is behind them, and they'll kind of come out of this eventually. But right now, they are still well under my cost basis of around $7, $8 per share. So I don't mind nibbling there. Again, more to Comcast Corporation, that position I'm really trying to build out. So we added 8 more shares there, ticker CMCSA at $42.72, and 4 more shares to our American Water Works utility company there, ticker AWK. Again, trying to build out these 2 positions. Now, total invested minus the $3,100 we reallocated was $1,457.10. The total passive income added with the new capital we added plus the reallocation, the pluses and the minuses, so you lose the Bank of America 100 shares there, but you gain all the shares we picked up with those funds. It added $140.42 in passive income. So a big jump up from last week to this week. So it was very nice to see. That's part of the reason I didn't mind, I guess, reallocating that $3,100. Yes, I like Bank of America. I still have a healthy position in Bank of America. If and when it pulls back down into a buy range, I will add back to that position. But right now, that $3,100, a lot of positions in my portfolio are pulled back significantly, like Pfizer, Realty Income, Enbridge. So I was fine with reallocating those funds into those positions that have really pulled back while Bank of America has shot way up. All right, now we'll run through the portfolio sector weights here real quick. Communications, and this is a big change too. The biggest one is probably going to be the financial slice right here. Communications sitting at 9.62% of the portfolio. Consumer discretionary sitting at 4.81%. Consumer staples makes up 11.62% of the portfolio. Energy sitting at 6.36%. Financials, I think this was around 8 or 9% of the portfolio. Again, now it is down to 6.75 because we reallocated that $3,100 from Bank of America. Healthcare sitting at 15.98. Now that is another thing that it did. That's part of the reallocation as well. Helped out with the healthcare industry. I know this was over 16, almost 17%. It did bring that down a little bit, building out and adding some funds to these other positions, kind of evening out this wheel a little bit. Industrial sitting at 7.55%. Technology sitting at 7.45% of the portfolio. Materials makes up 11.51%. Utilities sitting at 5.31% of the portfolio. REITs and real estate at 11.24%. And ETFs still the smallest sliver over here at 1.81% of the portfolio overall. And then over here on the right, you can see the portfolio sector weights broken down. Here's the percentages again that match over here, but also the funds allocated to each sector as well. A little note on that. I have a bit of a rule that I have set for my portfolio. I don't want any one sector to be more than 25% of the portfolio, and I don't want any one position to be more than 10% of the portfolio. So we'll look at the positions here next. Now, for what a lot of you like to see every week, and I'm going to show this every week, whether I'm up, whether I'm down, whether the market's up, whether the market's down, I want you to see a real portfolio built out over time so you can see the ups and downs of the portfolio. Sometimes you're up, sometimes you're down. You're going to roll with the market, right? Sometimes the market's up, sometimes the market's down. That's just part of investing. Don't freak out. You're going to see red, you're going to see green. Some positions are going to go up while other positions go down. That's all part of the market. I want you to see a real portfolio built out over time. So hopefully, for some of you who have not started your financial investing journey, it will help you build your confidence so that whenever you do see a position maybe that you buy go down, you don't freak out and sell. That is part of the market. If you have done your research and you're picking good companies, you understand their balance sheet, you understand how they make their money, how they make their revenue, what products they're selling. If you've done your research and it's a good company, when they pull back, unless things have changed with the company, it should be providing you a buying opportunity. That's the way you should look at it, right? So that's why I want to show you the portfolio. not only for those of you who are already investing and just like to see other people's portfolios, but also for you out there who have not started your journey. Hopefully it gives you the confidence. I'm not a financial guru. I did not go to college for finances. I did not, grow up in a family where my parents invested. I'm learning this on my own, and I'm willing to put it out there, what I'm doing, and show you so you can see the mistakes I make as well. So hopefully for those of you who are already investing, you don't make some of the same mistakes that I've made in the past, right? So that's what this is. I'm going to be as fully transparent as possible on this YouTube channel. That's what it's all about. Let's get back here. Here's the ticker, all the different individual positions in the portfolio, how many total shares I currently have. You'll see the Bank of America. I've adjusted this. Instead of counting for the 100 shares we had funds set aside for the wheel, I'm accounting for the 159.266 shares in the portfolio. Current price as of the close of business on Friday. Market value, average cost per share, my average cost per share, my purchase price, so how much I have into each position, right? You'll notice Ally is up 53%. So I only have $6,023.50 into the position, but it's worth $9,254.25 with $3,230.74 in total gains, right? So that's how that works. Here's the percent up or down. So if you notice the red, that means I'm down. The green and the darker green it gets, the more I'm up. So that makes it clear whether you're up or down. Really good way to see that visually. What sector each position falls in, whether they're a quarterly, monthly, or semi-annual payer. And I will say semi-annual may be a little misleading on some of these. BABA is not a semi-annual payer. Right now it only pays once a year. I've got SBSW right here. I'm sorry, Valet listed as a semi-annual payer. Sometimes they pay out 3 times a year. They typically will pay out at least 2, but sometimes they do pay out 3. So I've got that in a semi-annual category. SBSW typically does just pay out the twice a year, so it is a semi-annual payer. But I didn't want, if I put 2 more columns in here to adjust for, every single one once a year, 3 times a year, then this starts to get a little unreadable. Whenever I tried that, it's hard to read whenever you pull it up here on YouTube. Current dividend yield as of the close of business on Friday. My yield on cost is in this column. Portfolio weighting. So on the previous slide, we saw the sector weightings. Here is each individual position's weight. So again, I don't want any one position to be over 10% of the portfolio. I don't want any one sector to be over 25% of the portfolio. So J&J is the closest at 7.63%. I am probably going to maybe look to add, if it stays down here in the mid 150 range next week, I probably will add a couple more shares to Johnson & Johnson. Even though this is the largest position in the portfolio, I really like the price right now at $155 per share. It's under my cost basis, so it would be another one that's presenting a buying opportunity. Again, when I see all the red here, that's where I look for buying opportunities, or close. See, this one I'm building out. CM Comcast I'm building out, so it's close enough. I'm going to continue to build it out. Same thing with American Water Works. It's down right now under my cost basis, but even if it wasn't, I would continue to buy the shares until I get it to 100 shares. Estimated annual income in this column, what months they pay out, the dividend growth year over year. So you're going to see a couple things here with dividend growth we'll talk about down below, and where it sits at 15% of its 52-week low. So I like to keep my cost basis, like American Water Works, under where it sits at 15% of its 52-week low. So I'm willing to buy this up to $131.38 per share, for example. So total current shares, I have 6,170.209 shares. Market value is sitting at $224,468.19. I have $215,259.73 into the portfolio. Currently, I'm up $9,208.46, or 4.28%. But those of you who've been watching the channel for a while, I don't really watch this. It's nice to see that I'm up, but you've seen me as down as low as 5 or 6%. I don't freak out then, and I don't really throw a party and celebrate that I'm up now. It just, the market goes up, the market goes down. Current yield is sitting at 4.44%. Now here, part of reallocating those funds really brought up the yield on cost back into the 4.6% range at 4.634%. And that's why I circle it. This is what I am really focused on. The passive income provided by all the positions in the portfolio. The dividends paid out on an annual basis, and that goes up as I add new capital, as the positions in the portfolio, you'll see the ones highlighted in yellow, as they increase their dividends. These are the ones that have already increased their dividends. Valet just announced their increase as well, so I changed that. So as the positions in the portfolio increase their dividends, as I add new capital, and as those dividends are paid out from the companies in the portfolio, this continues to go up week over week, month over month, quarter over quarter, year over year, and currently sits at $9,975.16. Very close to busting into that four-figure payout range, right? We're going to bust over 10,000 by the end of March. Probably with next week's purchases, we'll be well into the 10,000 range. So it's very nice to see that passive income continue to grow week over week. Now, another thing that happened whenever we reallocated those funds, and not just because we reallocated the funds, but because Valet increased their dividend, right? Their increase was 29.78%. So that really shot up the dividend growth year over year to 5.72%. This had dropped down into the 4.6% range. We were thinking about reallocating Kraft Heinz funds here. I'm going to hold. I tell you what I'm going to do with Kraft Heinz. Because General Mills, the position I was looking at potentially rolling it into, another one that has shot up. I think it was when I started looking at it and thinking about it, I should have just pulled the trigger on it 2 weeks ago. It was at $63.78, $64.56, right in that range. So I was going to roll these funds into that position. I think what I'm going to do is I'm going to hold this through the end of the year, see what's going on with Kraft Heinz, reevaluate, and if they are not looking like they're going to increase their dividend, if their revenue and margins haven't significantly increased, I will probably look for a new opportunity for these funds in Kraft Heinz, because they have not started back their dividend growth yet. It's been well over 3 years, or a little over 3 years since I looked at this position. I think around 3 years. This is one of the first positions I bought in the portfolio 3 years ago when I opened it, and I was really hopeful that they would start increasing their dividend again, and they just have not done that. I think 3 years is plenty of time. It would be going into the fourth year here if we wait to the end of the year. I think that's plenty of time to give them to increase this dividend. So I'm going to be patient with them. I'm going to, use that long-term investing mindset. 4 years is still not really long-term in the grand scheme of things, but I think it's long enough for them to get their act together and start increasing their dividend again. And I'm a dividend growth investor. I want growing dividends, right? That's the whole part of dividend growth investing, the growth part. And they just have not been, 3 years I've been patient enough, I think, and there are a lot of other opportunities out there in the market with growing dividends that I could flip this over into it. Now, if General Mills was to pull back into the, $65, even $66 range, I might look at just doing it anyway. But right now, they've run up into, 69. Looks like they might bust through $70 here. So that's just a little more than I'm willing to pay for that. Well, let me know what updates in your portfolio this week. Did you add any new positions? What are you looking to build out right now? What are you buying? Are you taking any profits? Have you reallocated across the portfolio, maybe taking some gains in some areas and putting them in other positions, or opening new positions? Let me know in the comment section down below. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. Again, I hope you are on your own financial investing journey. If not, let me know why you have not started investing. What is your trepidation? What are you concerned about? What is the holdup? Why are you waiting? In my opinion, the best time to start is now, and the earlier you start, the better. Time is your friend in investing. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So I do a stock pick of the day series Monday through Thursday. If you're interested in that, again, hit the notification bell so you're notified whenever we put out any new content. And let me know a company you'd like me to cover in the stock pick of the day series. I'll try to work it in. Well, this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, just a quick reminder, I am on vacation this coming week. I will be making purchases just like I do every week. At some point, I will cover that whenever I get back. I think we're back Thursday. So Thursday or Friday, I'll put together the purchases for next week. So I'll at least have next Sunday's portfolio update video, which I believe will be Easter Sunday. So happy early Easter to everyone as well. So I won't be covering the Stock Pick of the Day series, but I will have an update on the portfolio next Sunday. So we'll see you when I get back. Hope you have a great week. Really appreciate you tuning in. Thank you for stopping by, and hope you have a great weekend. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investor journey for educational and entertainment purposes. Investing involves risk. You can't lose money. You should never invest any amount not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice counsel certified financial advisor.